Hey advisors, this is Bill Simone with Advisors After Hours. Thank you so much for tuning in. Today we have a really special guest. This is Ed O'Brien with eMoney Advisor. We are coming to the tail end of the eMoney Advisor Summit here in Austin, Texas. The theme this year for the conference was the heart of advice.
The heart of advice, Bill.
Absolutely.
Yeah.
I'm still looking forward to this conversation. We've been looking to sit down and talk for a while, and I finally cornered you so that we can have a conversation.
Yeah, and it's not cornered. It's actually like a couple minutes for us to relax and talk, and the conference ended today, so it's actually a great time to catch up.
Perfect. And your view as a tech provider, what do you think is a good technology stack for an advisor?
Oh gosh, that's a really good question. I think it depends on advisors and sort of what their core value proposition is. And eMoney, folks that work with us are going to be more planning-led advisors. So it does become a core for a lot of those advisors. And I'll say that because oftentimes they might be working with CRM or some sort of advisor business development digital marketing tool that might help them with lead development and generation. But once they become a client, then planning often takes over as the conversation and sort of the way for which that relationship is built. But maybe if you're an advisor who's doing more, sleeve level management for investments, then you're going to be looking at things like asset allocation, rebalancing, modeling tools, things like that that are going to be more important to you, more real time market data, right? So I think it's important for the advisor to understand their business model and where the value is, and then sort of build their ecosystem around that. But most advisors, and you probably know this, always start at things like, what is my CRM system? Where is if they're using a planning platform, what are they doing for portfolio and performance measurement and fee billing, and then some sort of decision making or decision modeling for whether it's portfolio testing and obviously reporting for their clients. An area we're starting to see more interest that we see at eMoney is around sort of the digital marketing and advisor business development. That's a piece that's becoming a more important part of the stack as advisors move to more digital marketing.
Do you see a space where technology from the past makes sense or can still be applied moving forward?
Of course. So, Bill, in my presentation earlier this week, I talked about the sort of talents of the head, the heart, and the hand. I think technology like calculators are a tool of the hand. So there's still time and places where those make perfectly good sense. What I would remind advisors to be thoughtful of, if they're finding areas where they're spending a lot of time in more manual processes or processes that are prone to error, that's where you should be spending your investment in time in making sure that you're modernizing technology.
Yeah. As an advisor, I got to tell you, there are certain words that make no sense to me. All right, I'm living in a world where every technology platform wants to be my hub. Every technology platform wants to be my first stop. You have your CRMs versus your APIs versus your aggregations, and I'm just throwing these all together because, eMoney is one of them, right? But we want everything to kind of work together without. I just want it to work, right? It's the watch versus the making issue, and there is a disaggregate amount of options out there. I think to grow your business in today's financial planning environment, now this is still a fairly young business, 50 years old. I'm 35, so 50 seems like a little
old.
Bit. It seems a little old, but in the grand scheme of things, that's a really young industry. And technology planning in and of itself has come a very, very long way from being based on specific products to really pushing a modular service model or an access type scenario where planning in and of itself is access to an advisor just to be able to ask questions. Do you think the focus still remains on the long-term projection out towards retirement and out towards death, or are you seeing, at least within your user base, or are you seeing a viewpoint going closer to goals and experiences and life events type scenario?
I think the answer is both, and it depends on the client that you're working with. I can give you an example. I mean, if you're working with a 24-year-old who may not be thinking about retirement as a goal, oftentimes they work at a company that has a 401k, and so retirement becomes an element of their plan and their sort of the execution, but they're not sitting around, like a 60-year-old sort of envisioning retirement as their goal.
Yeah.
But it's something that they're generally, an advisor is probably talking to them about, well, making sure that you're optimizing the match from your employer.
Right.
And then thinking about more and more. If you're on a high deductible plan, HSA is a good tool, even if you are 24 years old.
Yeah.
So I think that what we're seeing is sort of this separation of the goal necessarily from what are the accounts or sort of the underlying principles for how you execute the client's sort of long-term savings strategies.
Their long-term savings and their investment
Yeah.
approach, right?
Yeah.
Their push there.
Yeah.
Let's talk a little bit about eMoney. Everyone at eMoney, all of your employees have been incredibly gracious, incredibly friendly, and they believe in the culture and the values of the organization. Do you guys have a program? Are you as a CEO of this tech company, what are you doing to instill those core values within the culture of eMoney?
So thanks, Bill. And by the way, I appreciate that comment. We do. Having fun is one of our core values at eMoney,
Really?
and that takes shape in a lot of different ways, as you noticed. Bringing puppies into the eMoney Summit is a way that we have fun.
That is dangerous. You bring puppies to the conference, and you expect us not to want to take them home.
I think that's the idea.
What were you thinking?
Again, I'll no credit or discredit for that one. But the idea is, I think, fun is a way that folks that really like to work hard and have a strong sort of passion for what they believe in. It's easy to sort of mix fun into that culture. But I will say, it's an environment where people work hard. I mean, we have a group of advisors, 70,000 advisors and planners that we serve. Mm-hmm. They're demanding, right?
Yeah.
Because they really do need and rely on our software to help them run their businesses. And so it is making sure that when we're talking about enhancements, that we're delivering them on a good cadence and making sure the quality is good. That requires a team that's disciplined around how we develop software, but at the same time equally can have fun by taking afternoon breaks for coffee or video games or fraps if they happen to want one.
Yeah.
But so it's putting it together so that people have the opportunity to work hard around a mission we can all get behind, and then easily mix fun into it.
Have you noticed any difference from your time with Fidelity to coming over to the eMoney side, and how has that merger helped grow the company or change the culture? Has it had any impact?
Well, it's grown a lot. So I wouldn't attribute much of the eMoney changes over the past few years so much to its acquisition by Fidelity and sort of a way in which we work, so much as it's given us the ability to take what is also another value like Fidelity's is focus on the long term. Mm-hmm. And it does help a lot when you make decisions around having a group of people who are empowered. We're an agile development company, so we really believe in empowering teams to think about the future of the roadmap and the product and development. But getting folks aligned that it really does make sense to take a long-term view rather than just sort of shortcuts or the short term. So that's something that, a good example of something that does carry over from Fidelity to eMoney. But we have to operate differently. We're a much smaller business. We operate in a different model. We are software as a service. The way that we grow our business is getting advisors to that aren't using our software today to subscribe and use it. Our advisors that are already using us to expand their business as they grow and add more seats or use other elements or add-ons of our technology. It's pretty simple.
If you could just flip a switch, snap your fingers, and fix, change, or enhance anything in the fintech space, what would those things be?
Well, Bill, I'll maybe hone in on one area where I think, especially closer to home at eMoney, where we're already focused, and because we know it's a need, is making data easier to access through APIs that are more secure, they're more stable, they're more reliable. In other words, sort of making the data aggregation process, and oftentimes that means the client's aggregated data, but also the data the advisor has, getting it into the systems that they need in a more seamless way, so that the advisor's not spending time on data and sort of working with clients if they could just snap their fingers and everything's working and all their systems are using the same data and it's clean and it's updated, that would be a huge win for all of us. The good news there is I think that the industry's moving forward in that, but it's taking probably a little more time than all of us want. I know we're spending a tremendous amount of time and money, moving more to APIs and more reliable and more secure data connections for our clients.
Yeah, and that's a great point, because sometimes it seems like on the retail side there are solutions or options that are available. Especially through banking channels, for example, are now trying to bring in more of that aggregation solution, and other not financial institutions that don't work with planners or advisors are looking at integrating some of those technologies.
Right.
As a fintech provider, do you view that as a competitor, or do you see that as a complementary solution?
Actually, I'll point back to some of the comments that you were making earlier, Bill. It's one thing to be able to see all of your assets together, or your life in one place. It's another to be able to take that and then use it in a tool like Decision Center. Because I think oftentimes the value of the advisor is being able to help through the difficult questions, being able to help me analyze life's choices, and being able to visualize that, put it into a form in which the client can see what that outcome means. Usually, aggregation or having that sort of a retail tool doesn't usually go that far to have the guidance and the coaching of an advisor to help with those important decisions. But the getting the data together in one place is oftentimes a good starting point.
It is a good starting point. Getting clean data.
Yeah, clean data.
And that seems to be that space where, for advisors, we tend to have problems. One, we rely a lot on the clients providing us with information. But on the verification side, on the back side, sometimes there are issues there, making sure everything works together. So making sure that the data is clean and all is seamless would be amazing.
Right. And the other thing that's important is oftentimes it's if you're getting sort of the static balance sheet approach, that's not as helpful as being able to look at cash flow. Right. I think it's important, and I would say this is an area where cash flow is not just important post-retirement. Cash flow, I would argue, can be more critical and more helpful for someone that's in their 20s, deciding where does their next dollar of cash flow go. Does it go to pay down debt? Does it go to savings, investments? In making that decision, because time's on their side, has a much bigger impact for that audience. So I would say that's also an area where a difference often between what you might see sort of in the direct-to-consumer space and what we try to do and bring it together with the household or the client cash flow view.
The clients, and that actually leads me to my next question, which eMoney was one of the first tech providers on the financial planning side to bring in the client portal.
Yeah, it's critical.
And about a year or two ago, you guys separated the client portal from the planning experience. Why did you guys decide to do that? What was the motivation there?
It's because we do have advisors in some cases that they may not use the full suite of eMoney planning tools. So what we allow for it might be an ensemble of advisors who have different planning needs, but what they can then do is that every client that works with that office, that business, offer the same client experience out to their clients, even though not every client would be getting a financial plan.
A full-on
So
detailed plan.
it's more that I think of that as more of a packaging of our capabilities, and we do have some advisors that do purchase just the client side portal, the aggregation, the vault, so that they can offer something to that client just to get them going and organizing their financial lives.
So that they can see everything in one place and then eventually move into the planning space.
Exactly.
And that also is that why you created the foundational planning service as well?
Yes. So in foundational planning is it's another step on making sure that we have a full spectrum planning solution. We want to make sure that we have a planning solution that meets the needs of every client and the advisor that's serving them.
Yeah.
And so there's a lot of points on that spectrum.
Yeah.
And so from having some of the simple planning calculators all the way through, then you're stepping into foundational planning, and then you're moving up to advanced planning. It gives you pretty broad coverage of the types of clients that you can serve.
So it gives you so you wanted eMoney as a software or as a fintech solution to be able to offer more planning solutions across the board, or was it more to get the tool in front of more people?
It's both, right? So, and I'm sure you hear this sometimes as advisors say, I'd like to have financial plans for all of my clients, but I don't have time.
Yeah.
And so we'd like to say, well, that's not an obstacle anymore.
Yeah.
Right? Because you should be able to have a planning conversation with just about every client. Some of them may not go as deep. Some of them may just be very targeted around a goal and understanding, what's my gap in protection? And you can have a very targeted conversation. Importantly, though, the way that we think about it is this needs to be a platform that sort of moves with the client.
Yeah.
So then when that client's needs change, the advisor assesses the change and says, well, now it's time to actually have a broader conversation that's deeper and steps into advanced planning. You don't have to stop. You don't have to move the plan. It's all the same data that's been captured, and now the client's just moving sort of up the planning experience.
Yeah, they're growing as a client grows. The tool can grow with them, so they can stay in one ecosystem.
Exactly.
That's a great thought.
Thank you. There was, others at eMoney, I'm sure, came up with that idea.
And the tool in and of itself is going to continue to grow. What are you looking forward to in the eMoney platform as time moves forward?
I think there's a couple of big areas of opportunity for eMoney, and this is largely, we hear this from our clients, to continue to invest in the areas of sort of the higher end of planning and making sure that everyone loves the decision center experience, and that is unique to eMoney. And so we endeavor to take all of the advanced planning experiences and make them decision center experience. In fact, I think we just introduced lifetime cash flow. Yeah. It's been a huge hit across the advisor base that uses eMoney today. So you can expect a lot more of that. While at the same time, this is not an sort of either or. At the same time, we'll continue to sort of build out the planning spectrum and making sure that we can even go sort of earlier than foundational planning to some firms that really want to deliver a self-guided planning experience. And I'll choose my words wisely there, because oftentimes what's available today in the robo or the digital capabilities lead to an investment. Yep. Most of them lead to investment. We think that there's an opportunity to actually get some of the planning conversations started earlier around things like what is the sort of rules of thumb around what I should have available for savings, investments, rainy day funds, like some of the simple things, and then giving those end clients the ability to start to track and become aware of the behaviors that can help them develop better money habits. So we're actively working on tools like that, and again, that's helping to start to reach folks earlier in life with planning concepts. Again, it's not holistic wealth planning the way that we think about it today, but our hope is there. Then you're starting to engage an audience of folks that today don't really have access to advisors and holistic wealth, but they're becoming more familiar with planning concepts, which will likely help all of us in the future.
In this business right now, one of the biggest conversations, you mentioned robo-advisors and everything. A lot of those tools do lead to investment solutions. Right now in the financial planning industry and the financial services industry across the board, the conversation tends to lead to fee compression and a change in either business models, pricing metrics, planning strategies across the board. How does eMoney help combat or collaborate with the advisor so that their value is not tied just to the fee that they charge on investments?
Right. I think it's a really good point, and I hear over and over again. I don't have any data. We haven't done any research on this ourselves at eMoney, but I hear over and over from some of our best advisors that they're really not feeling the pressure of fee compression. Because they've already rationalized the fees that go for the investment portfolios and the investments versus their fees for planning. And I think the best advisors that have worked with us have already figured out a way to articulate the value proposition of planning to the client, so the client's perfectly comfortable paying the fees for which come along with providing comprehensive financial planning. The other thing, so I think that's the way that we help advisors through things like Decision Center and being able to show a client in real time some of the decisions. That's a proposition that can really help, sort of support an advisor's value proposition. It's not just, sort of asset allocation and into a model portfolio. It's helping you decide, how do you think about retirement at 62 versus 67, and visualizing what does that mean to me. That comes across loud and clear to a client. The other thing I would also talk about is we're starting to see different models for how advisors charge fees to their clients. And so there are still, the lion's share of advisors using asset under management fees, but we also see advisors that add in planning fees or retainer fees, and we do have some advisors that are using a subscription model for planning services, and then allowing or guiding the client toward the investment choices, the protection choices, without necessarily taking fees for that. We've seen, sort of the spectrum of how advisors think about running their business model I think is changing.
And final question. You're in Austin. What is one thing that you have to do before you leave this city?
Okay, so the one thing I haven't done, and everyone tells me I have to see, are the bats from under the bridge. Which is right around the corner from the hotel, but I've been a little bit busy this week and haven't made it out. That will be one of the things I plan to do either this evening or maybe tomorrow when we get a little bit of free time here. But evidently that's supposed to be something that you see here while you're in Austin.
Yeah, absolutely. The bats are absolutely cool. Make sure you get some barbecue while you're here as well.
Will do.
All right. Thank you so much for taking the time to sit down and speak with me, enjoy a beer, and have a conversation about fintech and where this industry is going. I really appreciate it.
Thanks, Bill. Appreciate being with you.
Absolutely.
Bye-bye.
Guys, thank you so much for tuning in. If you enjoyed this video, please do like and subscribe. Look forward to talking to you at the next one. Cheers.